Welcome, money magicians. Today, we're about to uncover a timeless treasure in the art of financial mastery. How to live off interest while preserving your principal. It sounds simple, doesn't it? Spend only the interest. Keep your capital intact. But this is no beginner's trick. It's the very foundation of multi-generational wealth. Welcome to 86 Don Finance YouTube channel, where we break down the hidden mechanisms controlling your financial life. Let's break it all down. No fluff, just the truth. Before we dig into the steps, let's start with a story. Picture this. Jonathan and his cousin both inherit $1 million. Jonathan wisely invests in dividend-paying stocks, earning a steady $50 annually, enough to live comfortably. His cousin, on the other hand, splurges the entire inheritance within 5 years. Fast forward, Jonathan's wealth grows stronger each year, while his cousin starts over from scratch. Today, I'll show you how to follow Jonathan's path. This isn't just about financial survival, it's about financial mastery. Buckle up, subscribe to the journey, and let's begin. Part 1. Decoding the core principle: interest versus principal. To understand this strategy, we need to internalize a crucial distinction. Interest is renewable, your principal is not. Think of your capital as a well that serves an entire village. The water drawn daily is your interest. If you respect the well, it never runs dry, but deplete it recklessly, and you'll soon be left parched. According to a Bloomberg analysis, the world's wealthiest families maintain their fortune by fiercely protecting their principal, treating it as sacred. For example, the Pritzkers, the family behind Hyatt Hotels, kept their shares inside trusts rather than selling them when Hyatt went public. As a result, their wealth continues to compound while the family enjoys dividend payouts year after year. Here's a tangible breakdown. $1 million portfolio yielding 5% annually equals $50 income. Stick to spending this interest, and your $1 million stays intact, compounding over time. Tap into the principal, you diminish both your future income and your safety net. This concept isn't limited to individuals. Corporations like Apple sit on billions in cash reserves but use their profits, interest, to fund innovation and expansion. They preserve their principal to safeguard long-term strength. The takeaway is simple: play the long game. Wealth isn't about depleting what you have, it's about letting your money work for you indefinitely. Part 2. Choosing the right assets for sustainable income. Building a fortress of wealth starts with selecting the right bricks. The wealthy don't gamble, they invest strategically in assets that produce reliable cash flow. Let's explore the top income-generating assets. Dividend-paying stocks. Look for dividend aristocrats, companies like Procter & Gamble, Johnson & Johnson, or Coca-Cola, known for increasing dividends yearly, even during downturns. Forbes 2024. These stocks deliver growing cash flow, helping your income outpace inflation. Real estate rental properties and real estate investment trusts, REITs, provide monthly income. According to the Financial Times, REITs are favored for their tax advantages and liquidity, making them accessible without becoming a landlord. Municipal bonds for stable, tax-free income. Municipal bonds are a staple. Wealthy investors prefer them to shield income from federal taxes. As highlighted by the Wall Street Journal, Intellectual property royalties from books, patents, or music rights can produce passive income for decades. Take Bob Dylan. Selling his songwriting catalog reportedly secured him over $300 million, BBC News. Private equity and high-yield corporate bonds, while riskier, with careful due diligence, these can offer higher returns. But remember, the key is stability, not speculation. The golden rule? Prioritize consistency over hype. Avoid chasing speculative trends like penny stocks or volatile cryptocurrencies unless they're part of a larger, income-focused strategy. Part 3. The Golden Rule: never touch the principal. Spending your principal is like eating your seed corn. You satisfy hunger today but sacrifice tomorrow's harvest. Let's look at history. During the Great Depression, families who preserved their assets survived the economic storm. In contrast, those who depleted their capital quickly faced ruin. The Economist. History of the Great Depression. Modern day? Imagine investing $500 at a 6% yield, generating $30 annually. Splurge on a $100 luxury car, and not only do you lose part of your principal, but your future income drops by $6 every year. Worse yet, most people mistakenly view dipping into principal as freedom, when in fact, it creates dependency. The more you spend today, the more you rob your future self of stability. By guarding your capital, you unlock the magic of compounding. Each untouched dollar becomes an income-generating soldier, working for you tirelessly. Let's put it plainly. Spend the interest. Protect the principal. Secure your future. Part 4. Adopting the rich mindset. Think long-term. Act strategically. The wealthy think differently. They see money not as a tool for indulgence, but as a lever for freedom and legacy. John D. Rockefeller famously reinvested a portion of all earnings, building a fortune that still benefits his descendants today. New York Times. His mindset: spend only the interest. Treat the principal as if it doesn't exist. My friend Sarah, mentored by a wealthy investor, adopted this same philosophy. Today, her portfolio delivers $50 a year, more than enough for her lifestyle, while her principal quietly compounds. Crucially, the rich avoid the lottery winner mindset. Statistically, 70% of lottery winners go bankrupt within 5 years. CNBC. 2023. Why? Because they treat principal as disposable. The lesson: preserve wealth by seeing it as permanent capital, not disposable cash. Enjoy the returns, but protect the source. Part 5. Designing an income-generating portfolio. Now, let's get tactical. To live off interest, you need a portfolio built for consistent cash flow. 3 pillars of income portfolios. Dividend stocks focus on blue-chip companies with a track record of increasing payouts. Dividend reinvestment plans, DRIPs, are a bonus, compounding your returns over time. Fixed income, bonds, municipal and corporate bonds provide stability. For higher returns, corporate bonds are an option, but require careful risk management. Real estate and REITs, these provide both income and inflation protection. According to Bloomberg, property prices in growth markets continue to offer attractive yields for income investors. Diversification is critical. Don't overload with high-yield assets that carry excessive risk. Balance equities, fixed income, and real estate for stability. And remember inflation. If inflation is 3% and your portfolio yields 5%, your real return is just 2%. Consider Treasury inflation-protected securities, TIPS, or assets that appreciate alongside inflation. Finally, share your favorite income-generating investments below. Let's learn from each other. Part 6. Building a financial legacy. True wealth extends beyond your lifetime. It's about creating a legacy that benefits future generations. Take the Rockefellers again. Their fortune endures thanks to trusts, strategic reinvestments, and an unshakable rule: spend only the interest. Today, they fund universities, medical research, and global initiatives through their family office. Even if you choose not to pass wealth to your heirs, preserving your principal means you can fund causes that matter deeply to you. As Andrew Carnegie once said, "The man who dies rich dies disgraced." Use your wealth to build opportunities, not fleeting luxuries. Imagine this. You've built a $1 million portfolio. You live comfortably on $50 per year in interest. When you're gone, your children continue this legacy, living off the income, growing the principal further. The secret to enduring wealth: spend the interest, preserve the principal, build a legacy that outlives you. Final thoughts. There you have it, your blueprint for living off interest and building lasting wealth. It's a proven strategy embraced by the world's most successful families and savvy investors. If you found value in this guide, share it with someone who needs to hear it. Subscribe for more insights on building a financially free future. And remember, keep your goose alive, enjoy the golden eggs, and secure your legacy. See you in the next one. Please note that 86 Dawn Finance does not offer advice on taxes, legal matters, investments, or finances. The content is intended solely for educational purposes and should not be considered professional advice. For personalized guidance, please consult your own qualified advisors. Although the information has been carefully researched and reviewed, it may not represent the latest legal or financial updates. Viewers are advised to confirm the accuracy and timeliness of the information, particularly before making any major financial or legal decisions. Until next time, stay informed, stay empowered, and stay our 86 Dawn Finance channel.